brokers. Alongside me today is Glenn Ho from Next Level Academy. Hi, Glenn.
Hi.
Yeah. So our topic today is investing in AI top stocks to watch. The structure of today's webinar is Glenn will start first and speak for about 20 minutes. Then I will present next. After I present, I finish my presentation, we will have a Q&A session together. Right. Okay, as usual, we will be giving out some lucky draw prizes as well. So be sure to stay for a chance to win these prizes. The lucky draw itself will be conducted on Tiger app. So you need to log into your Tiger app in order to participate. The prizes consist of 2 US dollar stock vouchers. We'll be giving out 20 of them in total. So to put it simply, a stock voucher itself is a cash rebate that you can redeem when your stock order is executed. We'll be giving out these lucky draw prizes at the following times: 7:32 p.m., 7:40 p.m., 7:45 p.m., and 7:50 p.m. So for example, at 7:32 p.m., a pop-up message will appear on your Tiger app inviting you to participate. You can just simply hit the participate button to enter the lucky draw, and 5 random winners will be selected. Winners will be announced about 5 minutes later. And that's all you need to know about this lucky draw. Good luck. And most importantly, if you have not yet opened an account with us, please do so by scanning the QR code provided here, and you can receive rewards up to 3,600 US dollars. In addition, my colleagues will be providing the account opening link in the chat room. And now I will pass the mic to Glenn. Glenn, take it away.
Okay, thanks, James. Okay, so can all of you hear me? I just want to check because there's Abraham, Adrian, Agnes, Quack, N Lau, Desire, Donald Lim. If you can hear me, type me, M-E. Just want to make sure everything is okay. The chat is open. Come, Testan, Steve Fu, Xiu Fong Go, Ko, Wen Ling, Ravendra, Dollars, Priscilla, Lichin. Okay, because this session, right, I don't want to be just one way lah. It must be two way lah. Okay, so if you can hear me, can you type Tiger? Come, and make sure everything is okay. Come, guys, don't be so quiet. I think we need to on the we need to on the chat up. James, I mean like, and the host. If I'm not wrong, right now only like the host and panelists can type. Yep. Okay, guys, I know you want to type, but maybe let us set out some stuff. I think the setting.
Yeah, I got it done.
Yep. Thanks. Okay, thanks. Okay, come. And say me, Tiger. Yeah, great. Thanks, James, once again. Okay, so let me share my screen. Okay, the questions that a lot of people has been asking is there a bubble in artificial intelligence? I think even before I share my screen now, can all of you share with me like what is the biggest takeaway you want to have from this session? Can all of you share with me? What is the biggest takeaway you? Because all of you are here not because you think I'm handsome, although I think I am. Come, what is the biggest takeaway you want to have? What and when to buy? Okay, very specific, very good. 1-1. Okay, Agnes mentioned the future of AI and what stocks to buy. Wow, about the future of AI. Okay, cool. Thanks. Okay, let me share my screen. Okay, the next very big question is there a bubble in artificial intelligence stocks? How many of you think that right now is a bubble to you? If you think it's a bubble, type 1. If you think it's not a bubble, can you type 0? Come. 1 or 0 to you. Okay, I just want to know your opinion. Come. You need, as a good investor or as an investor that you want to become very wealthy, you need to have your own stand. No matter it's 1 or 0, yes or no, you need to have your own stand. Come, 1 or 0. Learn to make decision. Okay, most of you write 1. Some of you write 0. Very good. Thank you so much. Okay, so How do we know whether is it a bubble? Later I will share with you, but I will share with you some stats. This is the current stock price of all the AI related stocks. Maybe not all, maybe most of it. So let me zoom in. Okay. Over here, you can see over the past 3 years. Yes, past 3 years. Let me draw on it so that you can see. This is Microsoft making 200 over percent, Meta 100 over percent, S&P 500, which is SPX, which is the top 500 company in the whole of US. Basically the US index is 70 over percent. Okay, which means the market. People always say market go up 1%, market go up 10%. This is the market. 70 over percent for last 3 years. Okay. Sorry, last 5 years. Yes, 2024 until 2019. However, Nvidia has gone up around 1,800%. That is why Nvidia have garnered a lot of attention. I'm not saying Nvidia is a good or bad stocks. I didn't say that, but this is a fact. So can all of you share with me, after looking at this one chart, right? What is your one biggest takeaway? What do you derive from this one chart? Can all of you share with me? Come, in one sentence. Come. Okay, Wen Ling also asked, how to select and evaluate stock effectively to make money in the long run? Very good. I like Wen Ling. Wen Ling, I like your question. Come, but before that, what do you derive? What all of you derive from this one chart? Come. Most importantly is not what I shared with you. Most importantly is what you take away. Okay, Donald mentioned danger. Okay, the rest of you, come. I see there's a lot of you. Yep. Let me see. There is Eric Chia. Okay, my bad. There is Hazel Yo, Jeremy Chu, John Smith, Jun Liu, Ken Chu. Come. Lee SL. Okay, market keep going up. Agnes mentioned. Nvidia has run too fast. Too fast. What AI stocks to select at the current level? Okay, very good, very good. Come. Okay, all of you have different answer, right? Some of you may think that Nvidia have gone up too fast. Some of you might think that, whether is it dangerous right now? Okay, so let me share with you this. Next thing is earnings. A lot of people may not see this, but I want you to see this. To become a good investor, you need to know the underlying assets. What exactly are you owning? So you can see there is S&P 500, Nvidia, Amazon, Meta, Microsoft, and Salesforce. These are the big ones. So when I open up their current PE ratio, PE ratio means price to earnings. Okay, those of you who know what is PE ratio, very good. Those of you who do not know yet, don't need to panic. Okay, PE ratio means how many times the market is paying right now to the stock price. Okay, of its earnings. Basically, how you can call it like how many times to break even. So the current price, if you buy Meta, it takes 24 years to break even. The current price, if you buy Nvidia, it takes 70 years to break even in terms of earnings. So let me ask you, as an investor that wants value, you want the PE ratio to be lower or higher, L or H? Can all of you type L or H? As an investor that want value, come tell me, L or H? Okay, lower, right? Exactly, correct. All of you are correct. Lower the better. That means take lesser time to break even. Just like maybe your property rental yield. Okay, the yield 10% better, 20% better. 20% means what? Take 5 years to break even. 20 times 500%. But why? Why? Usually in the market, usually when the stock price go higher, people start to chase it. I repeat again, usually when the stock price go higher and higher, people have this feeling of FOMO. That means fear of missing out, start to chase. Yes or no? If you agree, type A. If you don't agree, it's okay, type D. D means don't agree. Agree, right? I'm not saying Nvidia is good or not good. I'm just sharing with you the value right now. Okay, later we zoom in. Okay, So whether Nvidia or the rest of it, right, as a case study, whether is it expensive or cheap, undervalue or overvalue, we need to see another thing, which is the earnings lah. See whether the earnings can catch up or not. Okay, so let me share with you the earnings. Okay, one of the earnings is revenue lah. Okay, we don't go profit first, we see revenue first. Okay, you can see that the revenue of Nvidia, okay, has been over expectation. That means jump up, jump up, jump up. Then after that, the previous year, boom, jump up even much higher than expected. You see Amazon consistently going up. Salesforce consistently going up. Microsoft consistently going up. Meta also consistently going up. So I want to ask you, okay, because all of us are investor. I'm not sure how many of you are gambler or trader. I don't know, but I'm speaking the investor language. As an investor, do we want to invest in a business that is predictable, P, or not predictable? Can all of you type P or NP? Because some of you may be different. It's okay, totally okay. But you need to make your own stand once again. Okay, most of you are predictable, right? Okay, so let me ask you, based on this chart, not chart, based on these statistics of revenue growth, okay, this is yearly, which are the top two company that is more predictable to you? Can all of you share? To you. It's not to me, to you. I'm just sharing with you stats, but you need to what? You need to infer, perceive, derive from your own looking. So can all of you share with me which company are more predictable? Come share. Yep, I got another 5 to 8 minutes with all of you. Come. Okay, some of you mentioned Microsoft, very good. Some of you mentioned Microsoft and Salesforce, very good. So you can see, guys, just by sharing your stats, none of you choose Nvidia. I'm not saying that Nvidia is good or bad. I'm just sharing that Nvidia is unpredictable or maybe not so predictable. Maybe Nvidia next year suddenly drop in terms of revenue, can be. Or maybe shoot up even higher, skyrocket, also possible. Okay, but you can see Meta, you can see Microsoft, very smooth. Every year increase steadily. So as an investor, usually I prefer steady company. Okay, so why are currently Nvidia, AI chips maker like Nvidia, outperforming AI software companies? Why, guys? I don't want to just give you an answer. I want you to give me an answer. Why? Can all of you share? Come. Agnes, Adrian, Abraham, Bao Tong, CM, Desire Wong, Donald. Come, share with me. Why? Just guess. If you do not know, also okay, just guess. Vinod, Wenling, okay, Yong Sing, SK. Why? Why no Google here? Because Google is not part of my case study, Ravendra. Okay. If I put Google here, I take out Microsoft, sure got people ask why Microsoft is not here. Okay, so it's okay, Ravendra. Okay, most importantly is not what business I show. Most importantly is how I evaluate the business, and you need to learn from this. Then you can evaluate any business in the world. Okay, Ravindra. Okay, so some of you mentioned advanced tech. Okay, very good. Some of you mentioned profit growth, keep increasing a lot. Yeah lah. My question is why profit growth? Okay, because use cases revenue have not sufficiently fleshed out by AI companies. Okay, cool. Thanks. Okay, so let me share with all of you. Basically, currently, Nvidia is essential hardware. Can all of you type EH? EH means essential hardware currently. Okay, very good. I want you to remember, the more you type, right, the more you remember things. Okay, and currently is limited supply. The whole world is going AI, and hardware currently is Nvidia. Okay, and what usage? A lot of people has been using. Okay, and right now, high barrier of entry and constant innovation. Okay, so I don't want to like how to say squeeze all the information to you. If not, wow, too many things. But basically, just remember the main pointers. Currently, it is an essential hardware to a lot of AI stuff, and currently it's limited supply. That's okay. But before you invest in Nvidia, or before you consider to invest, you must always ask yourself one thing. Okay, is this growth a long-term growth or short-term growth? ST or LT? You don't have to answer me, but you must always think. If you think that is long-term, maybe you can consider Nvidia. If you think it's short-term, maybe just run away. It's okay. Because why? There's 8,000 companies, 8,000 listed companies in the United States. So why force yourself to buy Nvidia? Okay, so can all of you type 8K? I want you to broaden your view, okay, of seeing things. Don't need to die just Nvidia. Nvidia is just one of the stocks. Okay. Okay. So maybe let me see my time. Okay, I think I have around 2 to 3 more minutes. Basically, what stocks are poised to benefit from AI revolution? This is the main question that you should be asking yourself. Okay, not so much on Nvidia, yes or no. You should be asking, this AI revolution go up, go down, what are the companies that benefit from it? How many of you understand what I'm trying to say? If you understand, type U. U stand for understand. Come. I want all of you to answer. Come. Understand or not? Very good. Most of you understand. Okay. Very good. Let me take a look. Okay. So this is my last few slides. Okay. So these are the things I want you all to take a look. Okay. These are the industry that will potentially, I myself believe, that will benefit from the AI bull run. Okay, AI personally, I think is very good. More and more people are using AI stuff. Can be software, can be hardware. Okay, but I want you to broaden yourself. Example, AMD, Intel, Qualcomm, they are also benefiting from it. Okay, I want you to do your own research. Okay, cloud infrastructure. Wow. Okay, software as well. I myself are more into software, not so much on hardware. Okay, but you need to dig out more. Okay, cybersecurity as well. More people use AI, more people are prone to cybersecurity risk. So more people need cybersecurity protection. Okay, how many of you understand what I'm trying to say? If you understand, type U once again. Okay, very good, very good. Okay, and I want to share with you a last thing. If you want to know like how you can dig out information and where to look for the stuff, like how to look for information, right? Wow, all of you are in good hands over here. Because Tiger Broker is the way to go. So example, some of you might want to see Adobe, example. Maybe not Adobe, maybe Google. Some of you mentioned Google just now, right? One gentleman, Ravindra, Google. So when you click Google, okay, I'm not asking you to look at the chart. No. Okay, chart is good. Okay, but I want you to look at fundamentals as well. What is the company doing? You can click on profile. Okay, some of you might not know. When you click on profile, you click on financial, the bubble. Okay, these are gems. Okay, can all of you type GEM? GEM means gems. Tiger Broker have given you so much gem. Okay, and these are free of charge. You don't need to buy anywhere else. Okay, so all of you are very lucky. Okay, to use Tiger Broker. Okay, when you click financials, right, you can see is the financials doing good or not so good. Okay, valuation as well. The P ratio, you can see 5 years trend. Is it going up or going down? Is it expensive or cheap right now? Okay, you can see based on Alphabet, the P ratio has been going down. Very good. Okay, so maybe it's time to consider, take a look. Okay, and you can also look at here, the profitability rate. I don't have to go through this, but I share with you, Tiger Broker is the way to go. And Eric is very nice. Eric has Eric Cha, bracket Tiger Brokers you have seen. He have put down a link, okay, to sign up for Tiger Broker. So go for it. Very, very good. Okay, I want to ask all of you, how many of you want to know more about how to invest safely and profitably in the long run? If you want, type me. Yeah, before I pass the time to James to share with you more. If you want, type me. Very good, right? Okay. So just want to share, and let me share my screen. Okay, just want to share this. I've got 1 more minute. Okay. If you want to learn more, right? Actually, Wow, Tiger Broker is very good. Ask me to give gifts. Okay, like just now, James, I give you voucher. I also want to give you voucher. Okay, me myself, my name is Glenn, and I'm from Next Level. Okay, we do have a 2 hours online workshop. Okay, whereby we will be sharing with you. Okay, not only stocks, we will be sharing with you. Okay, how to supercharge your portfolio using options, and number two, how you can generate monthly passive income. Okay, and three powerful stock option strategies. Okay, initially all these is a 2 hour workshop it is actually cost you 297. But Tiger Broker is very nice. Okay, ask me to give all of you something special. And because of that, okay, for the first 12 of you who opt into this, I will personally give you this for free. Ah, 12 of you. Okay. So how to register for it? Okay, all of you just take your handphone out, okay, scan the QR code, okay, and opt in to join us, and this is totally for free. You love it? If you love it, type LI. LI means love it. Okay, now I pass the time back to you, James.
Uh, yeah, thank you, Glenn. Just a second. Sorry, can you guys see
Yep,
me? Because I cannot see myself.
loud and clear, James.
Okay, sure. So I hope that you can see me well. 1 second. Okay, let me share my screen. Okay. Okay, thank you. So now I'll be sharing my presentation. So I'll be taking about 15 minutes. Okay. So first thing first, I'd like to share with you my S&P 500 year-end target price. So in my base case, I expect the S&P 500 to go up by about 10% in 2024 to end the year at 5250. And in my best case scenario, it could go up by about 20% to end the year at 5750. So personally, I think it's possible that my best case scenario could happen. Meaning to say there could be another 450 points to go from the current price of around 5,300. So mainly due to the AI optimism itself. However, a lot of AI stocks have gone up a lot in prices. So why do I reckon that the generative AI stock bubble won't burst anytime soon? So there are two main reasons for that. Firstly, the total addressable market for generative AI is still quite huge. The generative AI market is expected to grow to about 1.3 trillion over the next 10 years from a market size of just 40 billion in 2022. Secondly, the valuation itself is still inexpensive compared to the dot-com bubble. At the peak of the dot-com bubble, Nasdaq 100 stock PE ratio run up to as high as 175 times, but the PE ratio as of yesterday was just 34.5 times. So even if this is an AI bubble, it is still a baby bubble. Therefore, even though many AI-related stocks are trading near their all-time highs, which may seem quite scary to a lot of us now, I reckon the better investment approach is to stay invested and just ride on the AI stock bubble rather than completely being out of the stock market now. And for the next few minutes, I'm going to sound super bullish and present to you my best case AI scenario. So one of the key reasons I believe that the S&P 500 could outperform this year and continue to perform well in the next few years is because I reckon that 2024 is a repeat of 1995. So what happened in 1995 that makes 2024 feels like 1995 again? Firstly, 1995 marked the beginning of the consumer commercial internet era. It's considered the first year the internet became commercialized, and it kickstarted a 5-year internet bull market. Similarly, in 2024, we are seeing that many companies starting to monetize generative AI, suggesting a comparable technological revolutions. Secondly, the interest rate backdrop is similar as well. In 1995, the Federal Reserve hiked interest rate to a super high level within a short period of time, and yet there was no economic hard landing, and Federal Reserve subsequently cut rates in July and December 1995. Similarly, in 2024, the Fed fund rates are trading at 5.5%, similar to the 6% level in 1995, and there is no hard landing as well, with the expectation of rate cuts in September and December this year. So the rate cut timing are similar as well. Lastly, low volatilities. In 1995, the average VIX index was trading at 12. In 2024, it's hovering around 14. And if 2024 is a rerun of 1995, I reckon S&P 500 may still run up further. In 1995, S&P 500 returned 34%, and the year-to-date return this year is only 12% so far. So maybe we can see more upside ahead. We also noticed that 1995 marked the start of the internet monetizations. It kickstarted the dot-com bubble. The entire dot-com bubble lasted for 5 years, from 1995 to year 2000. At its peak, S&P 500 returned 265%, while Nasdaq 100 returned more than 1,000%. So if generative AI is a bubble similar to the dot-com bubble, maybe it can continue for another 5 years. But to achieve a generative AI bubble, we need to witness AI significantly improving the productivity, similar to what the internet did in the second half of 1990s itself. So during that time, US saw a significant increase in productivity growth due to widespread internet adoption. So what is productivity growth, you may ask? To put it simply, with the same amount of work, the company can now produce more output. It means that your workforce became more efficient and productive. So when a company increases the output, it can lower the cost of the goods and services, leading to higher revenue, higher earnings. When your company makes more money, your company can raise the wages of your workers as well. As a result, the workers will spend more and the living standard will improve, and ultimately economy can grow faster as well. So all in all, productivity growth is one of the best economic scenarios because it typically results in low inflation and high GDP growth. Due to the internet adoption, the average yearly the productivity growth in the US from 1995 to 1999 was about 2.46% on average, compared to just 1.72% from 1990 to 1994. So the improvement is about 0.74 percentage points on average. I believe that generative AI or other branches of AI are likely to unleash the next wave of productivity growth. And as a result, we may be seeing a booming stock market as well. So having said that, I think you should focus on AI-related stocks, especially big tech companies like Magnificent Seven stocks. I see them as the primary beneficiaries of AI. And if you have been looking at the AI industry, you would have noticed that Nvidia is the best performing stock in Nasdaq 100 and S&P 500 so far this year. The year-to-date return is about 91%. So you may ask, why is Nvidia outperforming other companies? The key reason is other companies are building their AI capabilities and they have been spending a lot of CapEx on AI investment, and they are spending it quite a lot on the Nvidia AI chips because Nvidia simply has the best AI chips in the market at the moment. So this is why Nvidia earnings tend to surprise on the upside because many companies are buying AI chips from Nvidia. So Nvidia has been crushing earnings since fourth quarter 2023. And early this morning, both revenue and earnings beat market expectation as well. Revenue beats the street estimate by 6%, and earnings per share beats estimate by 9%. They also gives an earnings forecast better than estimate, and Nvidia also announced more dividend payout and a 10-for-1 stock split as well going forward. So other than that, I would say that the total addressable market for Nvidia is huge. It's estimated that the total addressable market that Nvidia is in is worth about $1 trillion. Most importantly, Nvidia valuations is considered inexpensive. So in terms of PE ratio, it's trading at 55 times. 1 year ago, it was trading at 218 times. So basically, if the earnings were growing faster than the increase in share price, PE ratio can further decrease from the current level. All in all, in the bull market, investors do not care too much about high valuations as long as the earnings itself can keep up. So here are some of the upside catalysts. I will not go through one by one, but I would say that the immediate upside catalyst is share split. When Nvidia announced the share split in May 2021, the stock went up as much as 38% in 2 months' time, right before the share split as date. So you should be a bit positive on Nvidia itself. So I like to show you the analyzed return and the risk metrics for Nvidia and other Magnificent 7 stocks, S&P 500 and Nasdaq 100. The key takeaway here is that Nvidia has the best annualized return among all the stocks here. For example, Nvidia has provided a 71% 10-year annualized returns. However, it's one of the riskiest stock here. So it has a maximum drawdown of 66% and a standard deviation of 46.7% over the past 10 years. This is why I reckon Nvidia is not suitable for conservative investor. If you really want to gain AI exposure but cannot withstand the risk associated with Nvidia, you might consider gaining AI exposure through other Magnificent 7 stocks here. So the current Bloomberg analyst consensus 12-month target price for Nvidia is $1061, representing an upside potential of 11.8%. But I think you should be seeing more analysts revising up the Nvidia target price pretty soon. Okay, so now let's look at some of the AI stocks beyond the Magnificent 7. So number one, some of you may be familiar with Nvidia tried to buy for 40 billion in 2020, but the acquisition itself fell through in 2022 due to antitrust concern. So as a result, SoftBank listed last year, and now has a market cap of about 120 billion. So basically, is the leading technology provider for processor IP for many devices, including supercomputers, smartphones, laptops, and autonomous vehicles itself. To put it simply, ARM designs and licenses the technology for others to use in making their own chips itself. So when you hear about a new smartphone having a powerful processors, there is a good chance that ARM's technology is behind it. So ARM's customers include Apple, Nvidia, Google, Microsoft, Amazon, Samsung, Intel, and TSMC. So for example, Apple builds its M4 chips based on ARM architecture. ARM also owns about 60% of the semiconductor IP market share. So many companies prefer to use ARM architectures because the processor itself consumes less energy than the Intel x86 processors. There is also a rumor that ARM will change the customer licensing from the upfront licensing to the time-based licensing, so similar to a SaaS model, so software as a service. So I think this could be a huge upside catalyst to the investor. But you need to be aware of the key risks of ARM itself, which is small share float. So ARM has a small share float of only 10%, with the remaining 90% owned by SoftBank. So if SoftBank decided to sell ARM, the share price could fall drastically. And the next company I'd like to introduce you to is ASML. So ASML is the world's leading manufacturer of the chip making equipment. Essentially, if a company wants to manufacture chips, the company needs to buy DUV or EUV from ASML. And ASML is the only company in the world that produces EUV lithography machine. So it owns more than 90% of the lithography market. To put it simply, Nvidia designs AI chips, and to make these chips, they send the designs to TSMC, a company that manufactures the chips, and TSMC will use the EUV lithography machines from ASML to create these chips itself. So all in all, Nvidia designed the chips, TSMC make the chips using the equipment from ASML. The key risk here is the PE ratio always looks so expensive. And ASML management also say that 2024 is a transition year. They only see a strong rebound in earnings next year itself. The current Bloomberg consensus target price is about $1099, representing an upside potential of about 19%. Okay, the third company I'd like to introduce is TSMC. So TSMC manufactures the chips that Nvidia designs. TSMC customers includes Apple, Nvidia, AMD, Qualcomm, MediaTek, Broadcom, and Intel. So in 2023 itself, Nvidia accounted for about 11% of TSMC total revenue, while Apple accounted for 25%. So you can also see that despite Nvidia's strong share price performance over the last 2 years, TSMC share price has not risen as much, mainly because a significant portion of the revenue still come from the smartphone market, which is Apple itself, which is currently underperforming. So TSMC expect the revenue from AI to account for about 15 to 20% of the revenue in the next 5 years. representing a CAGR of 50% over that period. TSMC is my favorite AI stock beyond the Magnificent Seven because I reckon that it has the most advanced chip manufacturing capabilities among all the chip makers at the moment. Okay, the last company I'd like to introduce is AMD. I would say that AMD is quite similar to Nvidia in many ways. AMD can accomplish almost everything Nvidia can, but it tends to do it slightly worse than Nvidia. Or maybe let me put it this way. Both AMD and Nvidia offer comparable performance in terms of GPUs and AI chips. However, AMD has always been known as the more affordable brand for GPU AI chip itself. Nvidia, on the other hand, has the best AI training and inferencing software, which is called CUDA. And because of this, customers still prefer to use Nvidia hardware and software together. So personally thinking, investor maybe should aim for a larger exposure to Nvidia and a smaller exposure to AMD. Okay, TSMC is the best performing stock so far this year with a 50% year-to-date return, followed by ARMS 49%, ASML 22%, and AMD 12% year-to-date return. And over the past decade, AMD has delivered the best annualized return of 45%. But I would say that all of these stocks are high quality and market leaders in their respective fields itself. If you already own some Nvidia, you might consider skipping AMD, but you should also consider AMD if you are looking to diversify away from Nvidia. Again, ARM itself has a small share float risk. ASML has earnings growth risk. So personally, I am a bit biased towards TSMC at the moment. Out of the four stocks here, I believe TSMC has great management that will continue to lead the company well. Okay, that will be all for me. Okay, I will now move on to the Q&A sessions. So we have received many questions. We have seen many questions submitted during the registrations, but we will do our best to answer them one by one. And most importantly, if you have not yet opened an account with us, please do so by scanning the barcode here. So yeah, let's go through one by one itself. Okay, so Glenn, probably you can take the first question.
Yeah.
Okay, so the first question is Nvidia undervalued at the current price level, $900?
Oh, okay. Wow, this is a super good question. I think the person who asked this question, right? First of all, he or she, I'm not sure who are you, but he or she need to ask himself or herself, right, whether the earnings can continue to grow at such a pace. I think later James can add on also because I believe we are all investors. I mean, all of us are investors, including me, myself, including James, yourself. So we can chip in to share our opinion. So coming back to it, right? You have to ask yourself. I mean, the person who asked this question have to ask yourself whether the growth rate can continue to grow. If the growth rate you think can continue to grow, I personally think that it may be a good investment. Yeah, but if the growth rate will be slowing down, if you think the growth rate will be slowing down or the growth rate is stagnant, right? Or maybe no growth rate at all, the earnings is flat, maybe it is an overvalue. Of course, this is my own opinion. Yeah. So I mean the person who asked this question, you have to make a stand whether you think the growth rate will continue to grow. Yeah, but James, you got anything to add on?
Um, yeah, I probably have a long answer for that.
Oh, okay,
Okay,
okay.
okay. So if you remember from my previous slides, I was saying that the
CGR.
Bloomberg consensus target price was about 106 somethings
Mm,
dollars. Um, but again, I would say that after the jump in share price tonight, because of the earnings released this morning, I would say that many analysts will revise up the target price itself. So personally, is it undervalued at the current price? After the market open at maybe above 1,000, I would say that yes, mainly because that I would say that the valuation itself is still not expensive at maybe PE ratio of 50 something times itself. And I reckon it could, I mean, the PE ratio could go much higher because of the AI optimism itself. But I just do not know how much higher it can go. I think the correct way to look at Nvidia is that, okay, Nvidia is a growth stocks that may not be suitable for a lot of investor,
mm,
but you also can see from my previous slide is that the 10-year annualized return is about 71%. Meaning to say, if you have been investing it for the past 10 years, every year you'll be getting about 71% total return. But probably one thing that everyone missed out is over the last 10 years, Nvidia has dropped more than 50% twice.
mm,
So the maximum drawdown was about 66%. So you can simply say that Nvidia has a high volatility itself. So I would say that Nvidia is trying to tell you that in order to even get a chance to enjoy a 10-year annualized return at 71%, you need to really withstand that kind of volatility. That
agree.
the stock could drop maybe more than 50% twice in the last 10 years. So in the next 10 years, it could drop more than 50% twice as well. If you cannot withstand this kind of volatility, this kind of stock trades, stock pattern itself, maybe Nvidia is just not suitable for you. To me, I reckon a lot of growth investor, or I should say a lot of growth portfolio manager has been struggling to find a better alternative to Nvidia itself. So I think at the moment, they have no choice but to keep investing in Nvidia now. Yeah, that's all for me. Okay,
Well,
so
I personally,
yeah,
I just want to share with everyone. I personally totally agree with what James just mentioned, that the AI really have lots of potential, and at the same time, whoever can withstand this type of volatility, I believe that Nvidia type of stock may or may not be Nvidia, but Nvidia type of stocks may be suitable for you. But those of you who cannot go through thick and thin with the stocks, maybe you have to consider other alternatives. Yeah, I totally agree with James. Yeah. Hmm.
yep. Okay, I think I see a interesting questions. Okay, it's about Palantir. So I think
Ooh.
it's one of the stock that fall under the radar of everyone itself. So the question is, what are the prospect of the stock Palantir? Okay, so probably I should take that first.
Hmm.
Okay. Um, okay, first of all, I'd like to say that I did not research a lot on Palantir. To me, Palantir is always more of a project-based company rather than a SaaS, software as a service company. And yeah, I really don't think it's a SaaS company itself. And project-based business model, right, to me is always a tough business to be in. So this is why if you were to look at the revenue growth, it's quite choppy. And I reckon that it's an AI company for sure that help uh, big corporations or US government to analyze data. But I also don't like the fact that the company has a lot of government projects because government projects is always having a little transparency. Maybe you can get this government project this year, but next year you may not get it itself. But again, I would say that Palantir was doing quite okay in the last 2 years, maybe because of the geopolitical tension itself. So Palantir, in that sense, was granted some government projects. I would say that the correct way to look at Palantir at the moment is that, okay, you should look it as a defense AI technology company. But if you were to look into the earnings, the revenue growth itself, it's always maybe 10 to 20%. So it's quite low in the sense. So it's probably telling me or telling you that, okay, the total addressable market for Palantir to be in is just not huge enough. But if you were to look back at Nvidia revenue growth were more than 200% for the past 3 or 4 quarters. So I would say that, okay, Palantir is a stock that a lot of KOLs like because it is super volatile, and it has probably a sexy product itself, because it's almost like a black box. So I would say that it's probably more suitable for short-term trading, but not for long-term investment. Yeah. Over to you, Glenn.
I just want to add on, like I totally agree with James. Like I see from the Tiger website, I mean the Tiger app, the revenue has been growing steadily for Palantir. However, the net income, the profit is not very stable, and the stock price is very volatile. So if you ask me whether I got invest, I personally did not invest in Palantir because it is something I do not understand. Personally, I'm a fundamental investor. I believe James is fundamental as well. That's why I don't invest in something I don't understand. That's what I'm trying to say. However, I totally agree with James as well because Palantir is so volatile, right? A lot of my students, especially those option trader or option investor, we actually make use of the volatility, okay, to actually do options on it. So the consistent income doing options on Palantir is very, very fruitful. Yeah. But of course it's not for everyone. Yeah, just want to add on. Yeah.
Okay, well said, Glenn. Okay, so I think the next question is more related to you. Okay, which is the best option strategy to use in this uptrend market?
Wow, nice.
And strategy to adopt when the market crash?
Wow, nice. Okay, maybe I answer the first question. What is the more suitable strategy for this uptrend period? Okay, because options got a lot of strategy, got uptrend, downtrend, a 2-leg, 4-leg. Okay, I just want to keep things simple. Okay, currently a lot of us are using this strategy called strategy X, whereby the stock price example, $100, but because we buy the options, we use the options in certain way that we can buy the stocks not of $100, but we only use like maybe 20% or 30% cash outlay. That means we buy instead of $100 per share, we can buy at $30 per share. And when the stock price goes up, we actually make double or triple. Then when the stock price touch wood go down, which is also possible, with our capital protection is up to 70% because we didn't come out $100, we only come out $30. Yeah, so this is a current strategy that a lot of us have been using. So the next question is like you ask like what if the stock market crash? If stock market crash, we got another strategy called strategy Y, whereby we hedge the market along the way. But I want to share that as of now, you don't think about market crash or what because I really think I am as bullish as James. Okay, I really think the market will go up for next few years. Yeah, and market goes up 80% of the time. Yeah, and it's very easy to know. People always ask, hey, Glenn, how you come up with this proportion 80%? Why you come up with this proportion 90%? Because very easy. Every 5 years, every 10 years, there is one crash. So easy, 80%, 90% of the time, market goes up. So don't go and bet the market go down. I have never seen anyone, right, shorting the market and become rich. I never seen in my whole life. Lucky once or twice I've seen before, but I never seen before anyone become rich by shorting. So just based on bullish, listen to James.
Okay.
James, yeah.
Yeah. So probably let me add on to that as well.
Yeah, please.
Very quickly. So when it is an uptrend, I probably prefer to do buying deep in the money, leap call, which is more than 1 year, buy a call options to capture the uptrend market. And if you are talking about market crash itself, I like to buy protected put. So typically buying at the money put with Yeah, and probably within a 1 month expiration date itself. So a quick answer for me. Okay, I probably move on to the next question. So I'm quite interested to answer the next one. So the next one is about Nvidia, sorry, Tesla itself. So why Tesla does not go up given the AI boom? You want to go first, Glenn?
I think you can go first. AI, Tesla, nothing much for me. Yeah, you go ahead.
Okay, so the short answer for that is that I would say that because Tesla is not in the generative AI space itself. So probably let me give you my long answer. So again, we should know that there are 6 branches of AI, including machine learning, robotics, fuzzy logic, expert system, neural networks, and NLP. So NLP stands for natural language processing. So generative AI itself falls under NLP. So basically last year there was a major breakthrough in the LLM, large language model. So which is why ChatGPT itself is so powerful. But personally, I would say that there was no major breakthrough in other branches of AI other than NLP. So having said that, I think this is the main reason why Tesla autonomous driving and robots Optimus itself do not see a major breakthrough similar to ChatGPT. So this probably explains why Tesla is underperforming other Magnificent Seven stocks. Yeah.
Agree.
Yes.
Maybe let me answer another question as well. There's an anonymous attendee mentioned, how can I diversify my portfolio within the AI sector to minimize risk? I think this is a super good question. That means this attendee want to make money but yet want to minimize risk. I think one very, very easy way of doing, right, is that you can buy ETF in using Tiger Broker. Yeah, because your objective is to buy AI sector instead of any stocks. I think this is the good way to go. Yeah, and Tiger Broker have a lot of ETF. Yeah, maybe James, you want to add on to this?
Okay, so you're referring to the questions, how can I diversify my portfolio within the AI sector to minimize risk, right? Okay, so I would say again, like what Dan said, you should focus on ETF, or maybe you can actually look into the stocks within the semiconductor ETFs because semiconductor is quite related to the AI itself, and semiconductor is the cornerstone of all technology. Other than that, maybe you can also look into utility stocks or utility ETF to diversify away from the AI sectors itself. Because if you have been looking into the utility ETF like SLU, it has gone up about 13 or 14% this year because AI training or inferencing itself use up a lot of energy. So I think this is the main reason. Or other than that, Glenn like a lot of AI software companies, so maybe you can look into them as well. Yeah.
Yeah. Maybe I saw another question, maybe you can help to answer by Steve Fu. Steve is asking what are the fair values and target price for Microsoft, Amazon, and Google. James, can I answer that?
Sorry, you want to answer that?
Yeah. Can I answer?
Yeah, sure. Definitely.
Yeah. Okay. Is it okay that I share my screen as well? Is it okay? Can or?
Yeah, sure.
Okay, so I share my screen. So I just want to let all of you know that why Tiger is really very good. That some of you maybe do not know the power of Tiger. So over here, like Steve is asking MSFT, which is Microsoft. Okay. So of course you ask me about my own target price, right? I must go and dig out. Okay, I store it somewhere. But if you want to ask like what are the analyst target price, what are the consensus, right? Actually you can look at here. Analysts, okay, and you can see based on 47 analysts, okay, mentioned that the average target price is 487, current market price is 430. Yeah, so I hope I answer your question, Steve Fu. Okay, there's a lot of gems, a lot of things within Tiger Broker that all of you must use. That's why James has been talking about it. Eric has been talking about it to sign up for Tiger. Okay, helping Tiger to promote as well. But I really think it's good. I really think it's good. Okay, James, back to you.
Okay, so probably let us continue to answer other questions as well.
Yeah.
So maybe we should take this one. Magnificent Seven has run up a lot. Is it the right time to take profit and move to other funds? If yes, what are the options? Okay, you want to go first, Glenn? Or I go first?
You can go ahead.
Okay, so to answer that, I would say that the short answer is no, I don't think so. I don't think now is the right time to take profit because, again, all these Magnificent Seven companies are great companies. I am still quite constructive on the long-term outlook itself. But maybe the only company within the Magnificent Seven that I don't quite like is Facebook. The main reason I don't like Facebook is because I don't like Mark Zuckerberg. I simply don't believe in the metaverse vision of his. And I also hate that the fact that he spent a lot of capex on the AI investment because Facebook does not have cloud computing. So I don't really understand why he spent so much capex on AI itself. I would say one strategy that for you is that if you are not comfortable in holding Magnificent Seven stocks, you can decrease your exposure, but you should always probably stay at least 70% invested in Magnificent Seven itself. So if you have maybe 100% in Magnificent Seven, you want to reduce it, you should maybe just cut down 30% of it itself. And I again would say that AI is not about Magnificent Seven. ASML, TSMC, are also good quality companies that you may also look at them as well. Yeah. So Glenn, do you want to add on anything?
Yeah. I agree with James that if you are thinking of taking profit right now, you have to ask yourself why you want to take profit right now? Is it because I believe the person who asked, maybe you got 10 or 20% profit already. Then you want to fast take profit because you're scared if you didn't take profit, then the stock price will drop. This always happen to a lot of newbie investors out there. Okay, so my suggestion to you is not about taking profit or not, is to really understand and learn about how to invest. Because if you know about how to invest, you understand the fundamental, I confirm right now you will still think that like what James and I think now it's still too early to take profit. Yeah, so
Okay.
just equip yourself with the knowledge.
Okay, thank you, Glenn. So probably let us answer one stock specific questions, which is Intel. So Intel does not seem to ride on the AI semiconductor positive outlook. Why is that so? Okay, you want to take that first, or I take that first?
Okay, you can share first.
Okay, so again, I understand that Intel is probably one of the beloved stock of the value investor itself. So I also have this kind of argument with my ex-colleagues maybe 5 years ago that I say that Intel is a bad company. And I probably would like to share with you the same thing now. I think Intel is simply a bad company. So why Intel is not able to ride on this AI outlook? Because no one is buying Intel GPU. To put it simply, Nvidia GPU is the best in the market at the moment. Intel GPU market share is probably less than 2% or less than 1%. And Intel CPU market share is being stolen slowly by AMD. So this is the key reason AMD is not doing, sorry, this is the key reason why Intel is not doing well. So, and most importantly, I think that Intel does not have a good CEO. The CEO is good at presenting. He can show you the beautiful, powerful PowerPoint slides. He can show you also powerful, beautiful PowerPoint slides and give you some promises, but he cannot deliver the result. This is why you are seeing that Intel has a tendency to disappoint all of us on their earnings result. I would say that maybe you should just forget about Intel. Yeah.
And just to add on, I mean to everyone, you can see what our James mentioned about Intel. You can see that Intel indeed the earnings, which is net income, has been dropping year over year. And the total revenue also not stable. Can you see that also dropping? Operating income also not fantastic, also dropping to almost negative already. So whatever James just mentioned, it really happens and it is a fact. Okay, so before you invest in any stocks, any one of you, please read up the fundamentals first. If not, you are just simply gambling. Yeah.
Okay,
James,
okay.
maybe we want to answer a last question. Maybe, I mean, because right now it's already.
Okay. Or maybe you like to choose the last questions?
Oh, okay.
Okay.
Okay, thanks for giving me this opportunity. Maybe you choose lah. You are the host.
Okay. Maybe this one. Okay, so is there a potential risk of tech bubble similar to 2000.com bubble? So
Is there a potential risk? Is there a potential risk of tech bubble similarly to 2000? Personally, I share my opinion. Then after that, James should add on. Personally, I don't think it's a tech bubble. Why? Because like what James mentioned, I totally agree. Because bubble is when the stock price keep going, but the earnings didn't catch up. The earnings drop, but the stock price go up. Right now, the stock price go up a lot, yes, but the earnings is growing as well. So to me, this is not a bubble at all. To me, the earnings can be going up a lot, maybe grow up a little, but it's still growing, so it's definitely not a bubble to me. But maybe James, you want to add on?
Okay, so I think it's a bubble, but it's a baby bubble. And I hope that this AI bubble itself can grow as big as the year 2000.com bubble. But I personally don't think that it can grow that big because nowadays, the major breakthrough itself is about generative AI, but not the other branches of AI yet. We are not seeing a breakthrough in robotics. We are not seeing a breakthrough in quantum computing itself. So unless you are telling me that there's a major breakthrough in all branches of AI, then we could be seeing a huge bubble as big as the 2000.com bubble itself. But again, I like to also mention that, okay, just remember the Nasdaq 100 PE ratio is trading at maybe 35, 38 times at the moment. And back in the dot-com bubble, it was trading at 175 times PE ratio. And back in the year 2000, there are a lot of technology companies not making money at all. But in year 2024, you are talking about a lot of big tech companies like Magnificent Seven stocks that are super profitable companies. So again, I would say that if it's a bubble, it's not as risky as year 2000. And in any case, if there is a bubble, like I mentioned in my earlier slides, I think that the bubble could last for 5 years. Yep. Okay. So I think we have answered most of them.
Yeah. Maybe I share one
Yeah.
last thing before we end. Like I think Ravindra asked where to get earnings chart. Hey, Ravindra, go and sign up for Tiger. Start from inside Tiger, you can get the earnings chart. Okay, and you can win up to 3,600. And also James just mentioned you can win a lot of voucher. Okay, so go and sign up.
Okay.
Okay, James, back to you.
Yeah, thank you, Glenn. Thank you for promoting us. Okay, so I wish everyone a good night. Thank you, Glenn, for joining us this evening. So I hope to see all of you soon. We hope to have more of this kind of sessions as well. So everyone, happy trading, happy investment. Okay, thank you.
Okay, bye bye everyone.
Bye. See you again.
Bye.